The Indian rupee has recently dropped to an all-time low against the US dollar, breaking the 84 mark for the first time. This significant depreciation has raised concerns in financial circles, and today we take a closer look at the factors driving this downward trend, the implications for the economy, and what lies ahead for the Indian currency. The Indian rupee fell to a historic low of 84.0750 against the US dollar on October 14th. The currency had been hovering around this critical level for over 2 months, with the Reserve Bank of India or RBI reportedly intervening to support it. Analysts believe the central bank had been closely guarding this threshold to prevent further volatility. However, the ongoing global pressures and domestic market conditions led to the rupee breaching the psychological level of 84. So, what's driving this slide in the rupee's value? A combination of factors is at play, with 3 major contributors: rising crude oil prices, foreign portfolio investor outflows, and increased demand for the dollar. First, crude oil prices have been surging, causing India's import bill to increase. As one of the largest importers of oil, higher prices exert pressure on the rupee, leading to a depreciating trend. Essentially, higher crude prices lead to larger trade deficits for India, and when import costs rise, the rupee often weakens because more dollars are needed to purchase the same amount of goods, putting pressure on the local currency. Adding to this are the significant outflows from the foreign investors. Recent data shows that foreign portfolio investors, or FPIs, have been offloading Indian equities and debt. In October alone, FPIs sold nearly 59,000 crore rupees worth of stocks. This is happening as foreign investors are shifting to the Chinese markets due to the stimulus measures announced by the government earlier in the month. Now, additionally, increased demand for the US dollar by foreign banks, likely for their clients, is worsening the situation. With the dollar remaining strong amid concerns about global growth and geopolitical risks, the rupee has struggled to hold its ground. While domestic factors weigh on the rupee, global influences can't be ignored. The US dollar index has been rather resilient, supported by the positive US economic data. Looking ahead, what can we expect for Indian currency? The outlook for the rupee remains volatile, with analysts projecting continued weakness in the near term. Factors such as the crude oil price trends and foreign investor sentiment will play crucial roles. Some experts in fact predict that the rupee could test new lows if the current trends persist. The RBI's intervention strategy will also be a key determinant of the rupee's trajectory. While the central bank has been taking measures to cushion the fall, it remains to be seen whether these will be sufficient amid a turbulent global economic environment. As the rupee navigates these challenging waters, market participants and policymakers alike will be closely watching. For now, the focus remains on managing the external vulnerabilities and ensuring that the fall does not spiral out of control. For more such updates, stay tuned to Republic Business. Thank you for watching.